Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show that brings you the best press releases out of the small cap world every morning before the open, so you can hopefully profit from them and maybe even find your next great small cap investment. Now, it's Monday, October the 29th, and as promised on Friday, news cycle is going to be heavy. I've got 5 great press releases for you and 1 milestone press release from both sides of the border. So let's get to it, right to it. First up is QPC Lasers, which trades on the OTC under the stock symbol QPCI. They announced the awarding of a $750,000 contract from a U.S. defense customer. Now, what is the contract about? Listen to this. It sounds pretty heavy. It's a contract to deliver high-power fiber laser pump engines for directed energy weapons applications from U.S. defense customer. Now, that sounds like the kind of company you don't want to owe money to, but that sounds like an incredible press release out of QPC. Now, that brings up, from this customer, that brings total contract award since April this year to $1.75 million. So QPC must be doing something pretty good. The basic gist of their technology, it's patented, it's proprietary semiconductor laser technology designed to achieve a 10 times reduction in cost, size, and weight compared to conventional laser technology. And we all know where the future of laser technology is going, so QPC seems to be right on the cusp. The company's trading right now at 75 cents. Great news out of QPC. Next up, on the TSX Venture, Bayswater Uranium trades on the stock symbol BAY, as well as on the pink sheets on the stock symbol BYSWF. They're saying that drilling has led to a major uranium discovery on their project in Labrador, and we have to read this as always with these mineral results. A near-surface uranium discovery with significant molybdenum credits from drilling on its Anna Lake prospect, located on the company's 100% owned property in the central mineral belt of Labrador. Highlights include an intersection grading 0.07% uranium over 40 meters, included in that 0.12% of uranium over 5 meters and 0.15% of uranium over 6 meters. Also on a separate hole, looks like 0.05% uranium over 25 meters, including 0.1% over 2 meters and 0.11% over 6 meters. What we really liked about this press release was the comments from George Leary, president of Bayswater, who stated, although it's very early into the drilling program, the cumulative widths and grades demonstrated, along with near-surface nature and continuity of the mineralization, indicate that the deposit may be amenable to open pit mining. Excellent potential exists for expanding the deposit near surface and for discovery of higher grade zones at depth. That's a pretty serious comment to be making. As always with these kind of press releases, you've got to go take a closer look and go through the results yourself. The company right now is trading at $1.06. That's off its high of $2.47. As most of you know, uranium companies took a bit of a hit over the summer when the price of uranium started to drop, but nonetheless, great results like that warrant a closer look at Bayswater Uranium. Next up, Prism Medical trades on the TSX Venture Exchange under the stock symbol PM, put out some pretty great Q3 numbers, as well as some consolidated numbers for Q1 to Q3. Let me give you some of the highlights. Revenue for the quarter, $10.7 million. That's up from $9.9 million last year. Sales for the first 3 quarters, $31.8 million, up slightly compared to $31.3 million last year. Net income for the third quarter, $0.9 million, just a touch off $1 million last year. But what I really like, net income for the 9 months, $1.8 million versus $1.4 million, and that translates into about 26 cents per share versus 22 cents per share on a fully diluted basis. So that goes to show me that Prism, in fact, has, despite the fact that this quarter they're slightly down in their profit, overall they're significantly higher. They're trading right now at about $3.18, which represents about the middle of its trading range. Next up again, Thermal Energy trades on the TSX Venture Exchange under the stock symbol TMG. They announced the completion of their first U.S. energy recovery project. It's a $1.4 million contract that was completed on time and on budget. It's the first its first waste heat recovery project in the U.S. Now, what's significant about this is this contract came by way of Johnson Controls. As many of you know, Johnson Controls is a major U.S. corporation, and it came in on behalf of a Fortune 500 food and beverage customer. So you're talking about a great partner and a really sizable customer. And what they did is they decided and implemented a waste heat recovery system. What does that mean? The manufacturer saves approximately $600,000 a year in fuel energy costs. a decrease in annual emissions of 3,000 tons of CO2, as well as 4 tons of nitrogen oxides. So you know this is a trend that you want to be a part of. If thermal energy is able to do this for a Fortune 500 company on one project, and in the press release they're talking about doing a feasibility on another project for the same Fortune 500 company, you know they're onto a great trend, which is renewable energy or clean energy. Now, what I also liked was the press release, was the comments out of Thermal Energy's Chief Operating Officer Dennis Forget, who said large quantities of energy were being wasted, which amounted to approximately 15% of the fuel energy purchased annually, and we've been successful in achieving those savings. So you're talking about 15% savings. That's a huge number for any company, especially a Fortune 500 company that's looking to tighten up the bottom line. The company right now is trading at 27 cents. Next up, another major order, this time from Opsens. It trades on the TSX Venture under the stock symbol OPS. They announced they received their first order from a major Japanese manufacturer of cardiovascular pressure measurement systems. I'm going to read this because it's a little bit technical. They received an order from a major Japanese manufacturer of medical devices. The size of the contract, $300,000 for the supply of LifeSense signal conditioners and pressure sensors. Again, you're going to have to go take a look at their press release because it is pretty detailed, but it's a $300,000 order. It's an international order, and it looks like their products, from what they're telling us here, their miniature pressure sensor permits the reduction of catheter size, which represents a significant advantage against conventional and status quo systems. They actually go on to list some of those advantages. You should take a look at them because with the population getting older and the boomer generation getting older, you know that medical supplies is going to be a pretty big industry and growing in the future. They're trading right now at 85 cents. And finally, probably too late for everyone to capitalize on this, but we do have to talk about the fact that Arizona Star, which trades on the TSX Venture Exchange on the stock symbol AZS, is announcing an $18 per share cash offer by Barrick Gold Corporation. Why do I bring this up? Because this is just another example of what is possible in this minerals and mining market, especially in the junior resource space, where Arizona Star just a few years ago was trading sub $1, and now they're being taken out for $18 by Barrick Gold. So congratulations to all shareholders of Arizona Star, and keep your eye on the junior resource Canadian markets. That's it for today. That's a wrap. As always, we'll be posting these notes to our blog. If you got any comments or additional due diligence, come on by, post your comments. Otherwise, if you want to find more great small cap companies, don't forget about the AGORACOM marketplace. We've got over 75 companies listed by exchange and industry, so you can find companies best suited for your portfolio. That's it. Have a great day. Talk to you tomorrow.